Do you remember when people feared the impact of January 1st in the year 2000? Rumours had circulated that planes would fall from the skies due to the effects the Y2K bug would have on our computer systems. Then all of a sudden, the day arrived, nothing happened, and life just carried on. This week has some similarities. The media has been warning us now for months that the real test for property prices would happen at the end of September. Deadlines around JobKeeper, mortgage holiday periods ending, and unemployment figures tipped to skyrocket were all things that justified those negative opinions and put a lot of fear into property investors. Announcements from chief economists of our biggest banks sent alarm bells throughout households across the country when they declared that we were fast approaching a property cliff. A cliff that could have devastating effects on home values. The Commonwealth Bank warned Australians to brace for a potential loss of up to 1/3 of their home value. And they certainly weren't on their own. National Australia Bank joined the CBA forecasting a similar potential crash. Westpac waded into the betting pool, forecasting a 20% fall over the same 2-year period. Well, the great news is the planes obviously didn't fall from the skies, but neither did our property values. In fact, these same economists have now reviewed these forecasts in a much more positive light. Westpac recently adjusted their forecast from a potential 20% fall to a 15% surge by 2023. This forecast gives property investors a new perspective on how even our most conservative analysts are viewing the resilience of our property markets. Along with surprising levels of buyer confidence, historic low interest rates, and recent great news around unemployment levels, things are looking pretty healthy within the property market. This has made the impact of COVID-19 much less than first expected, and certainly not as bad as the impact of the Banking Royal Commission. Of course, we are far from being out of the woods yet, and there are bound to be some twists and turns to the economic impact of COVID-19 in the months ahead. So investors should remain somewhat cautious. Some sectors of our markets may have tough months ahead. And as always, some markets are set to perform much better than others. For example, Brisbane is a popular choice by all the analysts that it's likely to be the top performing capital city market with growth forecasts of 20%, and many of our regional markets similar or even better growth forecasts. Now this is even more impressive when you consider they're not rebounding off a falling market. They're growing on top of growth markets, month-on-month growth. They've been really strong performers through the whole pandemic period. Now, of course, we'll give you more updates on many of the things that are happening across the nation in regular updates like this very soon. Take care, and we'll talk very soon. We'll have a look at what else is going on behind the headlines.
Location approved, property approved, safety guarantee. Invest approved, protecting you every step of the way.